Hello and welcome to this August 24th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're looking at MIPS Technologies, Inc. This is about a $290 million technology company in the semiconductor space. Taking a look at the chart, technically you can see that we've been in a very nice uptrend. If you go back to, I think it was back in, you can't see it on this chart, I think it goes back into February of 2010. MIPS was down at about the $3.50, $3.60 level, maybe even a little bit higher than that. Rose all the way up to yesterday's high at $6.72, so it made a really nice run to the upside. But you can see with this move to the upside on Monday, the gap up, it looked like we were making a breakout, and then you can see the big red candle where we failed. We came back down and failed to make the move on a closing basis above the prior high, and with that failure to the upside, even though it looked like we were breaking out in terms of price, you can see that the MACD was much lower. Now the MACD itself is based on closing prices, not on intraday or opening prices, but you can see that the recent closes, actually if we go back to Friday of last week, you'll see that that close was just about equal with the closes earlier in August, yet the MACD was much lower. So this is a negative divergence that's in play, and anytime we get a false breakout like this with a negative divergence, we start thinking 50-day test to the downside. Also, if you take a look at where the resistance was on a candle body basis, you can see that we had a couple of tests up at about $5.60 before we finally broke through at the beginning of August. Volume picked up. You can see also we had a nice gap up here. Looks like maybe the fourth trading day of August before we came back down. So I would look for price support back down around the 560 area. You've got gap support probably between 570, 575, and on the move to the upside, as the MACD's been pointing higher, each one of the trips back to the 20-day exponential moving average has been holding. You can see that the hammer that printed here toward the end of July held at the 20-day, and then again just recently we had several days where we got close to the 20-day. Didn't quite test it, but we got down close to it, right near the top of this gap support level here, about 595 or so, and then we turned back to the upside. But now that we've got this false breakout, we have the negative divergence in play, I think we can maybe look for a little bit more weakness in the near term, perhaps falling back to test this price support level, which would coincide with a 50-day test, and that too is what we generally look for when we have a negative divergence like this in play. I do want to caution you though that if you are on the short side or thinking about being on the short side, this stock has excellent volume trends. As you can see in early August on this move to the upside, very heavy volume came in. We do want to respect any kind of heavy volume move to the upside. So watch on a closing basis 664, intraday basis watch Monday's high at 672. If we can take those levels out to the upside and there's volume coming in on that move, you have to respect that even as a short. So keep that in mind. But to the downside, I do think with this reversal on Monday that the odds are greater that we may see a little bit more weakness this time, and therefore I'd be looking down around the 560, 570 area as a possible cover point. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.